Hello everyone, thanks for coming to the Wealth Club. On this channel, we talk about different financial topics to help you make smart financial decisions. So make sure to subscribe so that you do not miss any of the important information we share on this channel. I am Navpreet Kaur. I am a financial security advisor in Canada. And today we will talk about another very important topic, how to identify assets versus liabilities. We will understand this with the help of examples and we will follow principles described in Rich Dad Poor Dad book. So let's get started. The very first principle of financial literacy is to able to differentiate between assets and liabilities and buy assets and not liabilities. We all work hard and earn money, but it's not how much you make. It's how much you keep, how hard it works for you, and how many generations you keep it for. To weigh our assets and liabilities, we should understand the income statement, which has two sections, one for your income and another one for your expenses. The other one is balance sheet, which has two sections, one for the assets and one for the liabilities. The cash flow goes among these four sections differently for assets and for the liabilities. Here is an example of these sheets. Assets sections contain assets owned by someone such as real estate, stocks, bonds, notes, and intellectual property. The liability section contains a set of liabilities such as mortgage, consumer loans, and credit cards. The income section contains the income generated by these assets such as rental income, dividends, interest, royalties, etc. Expenses section contains the expenses incurred such as taxes, mortgage payments. The arrow represents the flow of cash from assets to the income as there is income generated by these assets. Let's understand further the difference between assets and liabilities. Let's first understand what is an asset. An asset is something owned by a person or a corporation that has some economic value and can generate cash flow or reduce someone's expenses. Assets also increase our wealth by either generating cash inflow, means cash coming to us, or by decreasing cash outflows, means cash going out. Now you have bought an asset. How will it change your finances? Now, as shown here, the asset will contribute to our income. So we will get better financially and feel like partying. Yeah. Now let's see what is a liability. A liability does simply the opposite of what an asset does to your wealth accumulation. A liability is simply a financial obligation upon someone or on a corporation. A liability either decreases your cash inflow or increases cash outflow. Now let's say you have just bought a liability with your income. Let's see how it affects your finances. As you can see in the statement, the cash flow goes from the income to liability as you bought it, and then liability will have some expenses, so the cash goes out from the expenses section. As the cash goes out, you end up feeling like this, which we don't want for anyone. Now, we cannot go into full details of an asset, but let's briefly look at the type of assets. Now, assets can be categorized in three main categories. Fixed assets, which are long-term resources that someone acquires, such as land, buildings, etc. Financial assets, which includes various types of investments, such as cash, stocks, segregated funds, and intangible assets, the ones with no physical presence, such as patents, copyrights, trademarks, etc. Now, the big question is, how does someone know if they are buying an asset or a liability? Now, the biggest mistake people do is they think of their liabilities as their assets and end up buying liabilities instead. To answer the previous question, let's take an example, the family house. Now let's see what happens when you buy the family house. When you buy a house by giving some down payment, you have more expenses coming in. in the form of mortgage, insurance, maintenance of the house, property taxes. Now, after you have paid off all the mortgage, you still have rest of the expenses. Now, let's talk about income here. The family house does not put anything in your pocket unless you sell it. Now, I'm not telling you not to buy the house. All I am telling you is to understand the implication that comes along with it and be prepared for it. My advice is to accumulate assets first and then buy the family house. Now, let's see our income statement. There are various expenses added to the expenses section, and this happens to your cash flow. In this case, it would be a liability and not an asset. Now let's say it's a rental house. You still have the same expenses as the family house, but the rent is adding to your income as well. Now, if income is more than your expenses, it is an asset. Otherwise, it's a liability. So, we can say that it can be both asset or a liability depending on the cash flow. Now, let's understand the income statement for the rental house. You still have the expenses generating the cash outflow, but you still have something in income section generating cash inflow. Now, if it's greater than the outflow of cash, put it in assets column, otherwise put it in the liabilities column. Let's take car as an example. Now with car, you have expenses such as car loan, insurance, maintenance, etc. If your car does not put anything in your pocket or help you generate cash inflow, then it would be a liability. However, if you use your car to earn and the money you earned is more than the expenses for your car, you add it to your asset column. We can make a similar income statement for your car as well as we did for the house. I hope now you got a better understanding about the difference between assets and liabilities and how to check which one are you buying. Now, sometimes we have to buy the liabilities. We should buy the liabilities. I am suggesting is first accumulate the assets so that your liabilities can get paid by those assets. If you need more information, please don't hesitate to reach out to me at this email. I will put my email and some other useful resources in the description. Please check out my other videos to know more about smart finances. If you like the video, please give it a thumbs up. If you are interested in building a better financial future for the family, please subscribe to my channel. Thanks a lot for watching. Have a great week.